Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this email because you got an email notice for me saying that we're going live right now, 3 o'clock. It's Wednesday, March the 17th. If you're not on my email list, then you need to get on it. I got a link uh, with the YouTube description for you to do it. It's free. And this is an interesting moment in the markets, and it's got a lot of ramifications to it because Jerome Powell, just in the Federal Reserve, he's the chairman, they just released a Federal Reserve statement, and it includes a lot of implications and even predictions for what they think is going to happen over the next 2 years. And so there's actually news happening from this meeting. Oftentimes they just repeat what they did last time, but this one is important and it's going to set the stage for a lot of stuff. So there's a lot of things I'm going to want to talk with you about when it comes to this meeting. However, let's turn first, because this is what catches everyone's attention, to the initial market reaction. This morning, the NASDAQ was down again over 100 points. There's continued relative weakness in the big cap technology sector as compared to the Dow, as compared to the S&P, as compared to the Russell, and other more bullish sectors that we've been talking about. But the initial market reaction here, and I'm going to share my screen so you can see what I'm looking at. And we will talk about individual stocks, but gold is rallying sharply today. It's at trading at a high of the day. Silver up 1.72%. The Dow up 200 points. S&P up almost 0.5%. Nasdaq up 0.88. Interestingly, though, bonds are made a new, the 10-year treasury yield made a new high for the year before the Fed meeting. Now they've come down a little bit. They're unchanged for the last 24 hours. But the markets are responding today positively as far as being up to in reaction to the Fed. You can see the updated headline. Fed says it will hold off on rate hikes through 2023. However, there's much more that they said. And they made, so obviously everybody knows inflation is coming. The economy is going to grow from where it started this year at and from the depths of despair of 2020. Everyone knows that. And there's going to be inflation as a result of not just that, but the Federal Reserve's own policies. And we've seen secular lows in commodities across the board. We have seen agriculture commodities make secular lows last year. The oil prices have been jumping. Energy stocks have been jumping in the first quarter of this year. But one thing I was most curious of, I wasn't so much what the Fed was going to do. The media was trying to set up like there'd be some drama on that to make you want to feel like you have to tune in. But honestly, they already leaked it all out on Monday to the Wall Street Journal. Typically, the Fed will do that. They got reporters there they like to talk to, and they give them the story because they don't want to actually surprise the markets. So there was really no surprise. No one, thought they're going to raise rates, much less be hawkish. But as you'll see in a few moments, this may be the most dovish statement that the Fed has made since, let's say, 2019, when the Fed reacted to the stock market declining 20% in the fourth quarter. 2018, they made a lot of dovish statements, and various Fed officials did. Today's statement is similar in its implications. But before the market even opened up, I sent out in my morning email where I have links to the top stories that are catching my attention in my morning article, what I was going to have my eye on, and that was the US dollar index. So let's see what that has done. There's an ETF that tracks it, UUP. Well, the US dollar index is down, trading at the moment on a low of the day. And what this is important to me because the U.S. dollar index came into this year bouncing off of a low set right around New Year's. It had an extreme oversold reading is in terms of the RSI indicator. So it had to work that off. And gold was correcting and silver pulling back and mining stocks pulling back as part of the process of some strength in the US dollar. But I believe that strength is temporary. That overbought condition has been worked off. And what I was most curious to see would be today, how would the US dollar index trade after the Fed statement? And now we see it's gone down and gold has shot up. And let's see what's going on with the mining stocks. Up, GDX almost up 3% as we speak. And notice this GDX gold stock ETF has pulled back. It's been in a pullback since August. And now, it also got oversold coming into this month. Last Friday, we saw yields go up, but this went up and gold went up. That was a sign, hey, this correction's probably over with, because now we're seeing positive movements to what had been bad news. And boom, everything now appears to be in gear. And that's the type of thing you can notice and take advantage of when you're on top of these markets and really paying attention, not just looking and loading up a phone and using an app and just looking at price gyrations on fad stocks. You got to really do your work and you really keep on top of things. So we see these sort of things happening and take advantage of it. Now, I just drew this downtrend resistance line, which is sitting around 35, I'd say 36. And we're basically a point and a half away from breaking that. If we break that over the next couple of days or the next week, then I think we're going to see GDX and mining stocks rally back up to their August highs. And then, I'm bullish, but we'll evaluate things step by step. But the short-term trend is now up instead of down. And I know I talk about gold and mining stocks a lot, but at this point, they are the things that I believe are in the best positions to rally the most over the next couple of weeks. I'm bullish on energy, and energy stocks are up today, but energy stocks have gone up roughly 100% since November. That's fun. I'm in them. It's fun to be in that, but they're so overbought that they're likely to have to consolidate some of these gains. Whereas the mining stocks have come through a correction, so they have a better chance to make more gains over the next 6 to 12 weeks. Probably they have the odds to go up more than anything, let's say over the next 6 weeks. So that's something we're going to be on top of over that time frame. So before we talk more about some individual stocks and charts, I got this piece of paper because I took some notes about what was going on with this Fed decision, because it's so easy. We're talking together, but I know most people aren't paying any attention to the news today. And what's going to happen is they're going to come home and look at what we just looked at, the market reaction, and not the fine details of what just transpired with the Federal Reserve. So some of the things that was in the Federal Reserve statement, they upgraded GDP growth for 2020 from a prediction of 4.5% to 6.5% growth. That's nice. We all want to see the economy grow. However, this is where things get very interesting. They also are predicting that CPI inflation is going to go above 2% and as high as 2.4% this year. So just as we all know, the Fed has to deal with reality to a certain extent in their statements. So they are predicting inflation is coming. However, in the past, the Federal Reserve has responded to inflation by raising interest rates to stop it and make inflation go down. And everyone knows, and they know, if they were to do that, the stock market would collapse. So they don't want to do that. So they have therefore predicted that in 2020, inflation will go back down, or excuse me, 2022, I mean, 20 next year, inflation will go back down below 2%. And Jerome Powell is giving a press conference. I turned it on before to catch some of what he was saying, and he used the phrase transient inflation, temporary. So even though inflation's coming, he says it's temporary. And obviously, the implications from the Fed is they're going to ignore inflation. Nobody can predict exactly what the economy is going to do in the future. The Fed Reserve cannot predict what the economy is going to do in the future. In fact, in all the years that I've been trading and investing in the markets and following what the Federal Reserve does, they have made many predictions that have turned into complete failures. So, for example, in 2007, Bernard Bernanke was predicting that real estate was pausing and was not going to have any significant consequences, the falling prices in the economy or the financial markets. Obviously, that was completely wrong. And then Alan Greenspan made similar wrong predictions. You know, it's not these guys are stupid. They're not stupid at all. But nobody can really predict the future. And therefore, I do not take these predictions of what the Fed is going to do beyond this year seriously at all, much less what they claim the economy is going to be doing in 2022. And this idea that inflation is just temporary, in the words of Powell, transient, I don't believe they have any real evidence to support that. And I don't know if it's real or not. In fact, I'm very skeptical that inflation is going to be proven to be transient at all. But we will see. What we do know is commodity-related stocks in futures contracts are going up, and they have, energy stocks are not. They don't look like they're topping out and going into a significant decline. They look like they've gone up a lot and are about to pause. We will have a moment of truth, though, in a couple months of whether inflation is temporary or isn't. And that will be an interesting moment. But right now, I would say that the implications of what the Fed has done, the market reaction is setting the stage for the next couple months. The Fed is completely dovish. The Fed is going to ignore inflation, and the economy is going to grow. Things are opening back up. And one phrase I heard Jerome Powell say multiple times in his press conference was lift off, lift off, lift off. Well, in terms of the economy, well, today, the implications of inflation is coming, but I'm not going to do anything about it. And I'm going to predict it's going to go down next year, so I don't have to do anything about it. That is probably, perhaps, one of the most dovish Federal Reserve press conferences and statements I have ever seen. And that liftoff is obviously today fueling rising prices in gold and silver, because it's saying that we're not, even though the yields have gone up, if inflation goes above 2, we're not going to try to chase it with higher yields. We're just going to sit here and do nothing. And that's why we're seeing the metals do what they are today, and the entire stock market acting more bullish than it has in the past couple of weeks. But it's my belief that in this window we're now in, and I'm speaking a 60-day, 90-day period, it's going to be the gold stuff that is likely to beat the rest of the market averages. Hasn't been that way for the first 3 months this year, but it definitely looks like it's going to be for the next 3 months. So let's go and look a little bit more at some individual stocks. So I'm going to return to sharing my screen. And on Monday, I bought several stocks in this small Robinhood account I've got. This is what they're doing right now at this moment. And the stocks are on the right. You can see WPM. What I did is I took, I divided this Robinhood account up into 10 slots and put 10 stocks. It divided up the account so I could have 10 equally weighted positions, and I bought them all Monday. I just kind of been neglecting completely this Robinhood account because I got accounts a lot bigger than this that I really pay a lot of attention to. But I thought, hey, I haven't been doing anything with this account. Let's just start using it, and we can talk about some individual stocks together, and I can use this account to track them. So here's what we see happening. The numbers on the right are what they're doing today. WPM is wheat and precious metals. CXP is a REIT. STNG is a shipping stock. LTC is a REIT. We got PAS, another silver miner. FNV, a gold mining stock. URN is a shipping stock. And my idea was I bought 3 mining stocks, 3 REITs, and 3 shipping stocks, 1 energy stock, because I wanted to spread out in sectors that I think can beat the stock market averages over the next couple weeks. And my idea is I want to show people that use Robinhood, that got their own Robinhood accounts, that they can do so much more than simply dumping money and trying to chase the stocks they see on the top 100 list. They can do things that are different than, let's say, what the ARK ETF does in a safer way, frankly, and beat the market. They can make. My hope is to beat the market by buying 10 stocks spread out in 3 sectors. It's a way to diversify. And when you spread out in 10, you don't feel like I've got to buy 1 stock and try to gamble it up and make this massive return, or get in something extremely speculative, or think I don't know any better, so I got to look at the top 100 list and assume other people know more than me, or I got to buy something really silly like the ARK ETF, which is dumping and cracked. No, there's easier ways to trade and spread out in 10 in a couple of sectors, and it's just less volatile, and you can still beat the market. So that's my goal, is to show people by example that they can do it too, without doing the things that I think these apps encourage people to do: reckless risks, chasing things. I bought on a pullback these mining stocks, or after a pullback, and that's the best way to buy, not just when stuff is shooting straight up for week after week and you're trying to chase. No. And so my goal, let's see, am I able to even beat it today? The NASDAQ QQQ's up 0.61%. My little Robinhood account up 0.87%. So today we are achieving the goal, but we got to do it over the next 6 weeks or 2 months or whatever. It's got to happen over time. One day is fun, but one day is enough. But Jerome Powell is helping me today. The Fed is helping me today because we've got wheat and precious metals. We got Pan American Silver and Franco-Nevada, 3 mining stocks. And let's look at the charts because they're fun. Wheat and precious metals up 1.5%. I think someone could buy this stock, put a stop loss below 35. PAS, this stock right here, probably one of the more bullish as far as chart patterns go, I got in this 10 position portfolio. You could put a stop under 32 and be a part of that, I believe. Franco-Nevada, a little bit trickier to buy because it's shot up, from the recent low. So it's really kind of tracking GDX. Perhaps GDX arguably would be a better buy. It's in GDX. And I do have GDX also in my retirement account. S&P is a energy stock, so it's still jumping up and down, taking a breather. But I wanted to buy energy stock. Let's look at the shipping stocks. URN. It's, to me, these are exciting stocks too. They were lagging the market until they came alive, and I think the shipping sector is poised to be one of the top performing sectors this year. There's not many stocks in the sector. They pay big dividends. They tend to go up when commodities go up. The sector itself is a big boom and bust pattern where the stocks crash and then go up big time when they do go up. So I think we're starting one of these big cycles, but this stock hasn't even cleared its September August highs yet. So what were the other ones? ST&G is the other shipping stock. Now the other one is down. DHR that I got, it's just sitting there, So this is actually one I got down today. And I like the REIT sector. This Realty Income, I bought 3 REIT stocks. I think LTC was another one. What was CXP, which is up, I believe, today. Yeah, CXP. So, RWR is a ETF that tracks that. I'm bullish on real estate in the United States. Real estate went up 10% last year. These low interest rates are good for real estate. And when the Fed says we got inflation coming, but we're going to sit there and ignore it, that is bullish for real estate. Real estate exploded in value in the 1970s. And when rates are lower than when mortgage rates are lower than the growth in real estate prices, it's fueling what could become a real estate mania. REITs tend to historically track the price of real estate. I'm too lazy to go out to the bank and take out loans and go in debt and run around and try to buy houses or things like this. I'd rather just press the button and buy REITs to benefit from rising real estate prices. So that's what I've done with roughly 10% of my money in my big accounts. I've put it about 10% into REITs because I'm just don't want to take on debt from the bank, and I'm too lazy to run around and want to get close. Have to think about I'm buying this house and what am I? It's too much. Just buy REITs. That's my solution. That's the way I want to benefit from rising real estate prices. And if you think back to what happened, not just in the 1970s, but in from 2000 to around 2006, REITs were among one of the top performing sectors in the whole stock market. And these things pay big dividends. And then when the real estate prices fell, and even after Bernard Bernanke said they'd stop falling in 2007, REITs crashed with the real estate market. REITs tend to trade with the real estate market. I'm bullish on real estate, and that's why I'm bullish on REITs. And I don't like throwing all my money in one sector. I'm spread out in lots of different things. And so what do we got? It's 3 going on 330. S&P's up 11. I'm not expecting the stock market to just go nuts from right here, even with it up today, even the Federal Reserve being as dovish as they are in the statement. I'm sort of expecting what we've seen over the past month to sort of continue, meaning days of weakness in technology stocks. They seem to be breaking away from the S&P, the Dow, which are helped by more cyclical sectors now. Money is flowing into REITs. Money is flowing into banks. Let's look at what banks are doing today. XLF right on near a high. And what is a stock like Tesla doing? Still down from its high. And so I think on the the market's not going to go up every day. On the down days, you're going to see bigger selling in stuff, I think, like Tesla, like the NASDAQ stocks, like the ARK ETF. And I expect that to continue. I think these things, though, are likely to trade okay. And the whole market probably will be okay. We had a sharp drop in the NASDAQ in these stocks, these tech stocks. it made me turn a little negative on the market there for a couple of weeks. But we did reach an oversold condition. We're bouncing. These things are bouncing. I think that bounce can work. It can continue going into earnings. Next earnings season starts towards the end of April. I think these tech stocks are likely to trend sideways with an upward bias into that with the entire stock market. So I'm not really thinking anything big is going to really be happening. And I'm trying to just look out 6 weeks, basically. And when the earnings season start, we might start to see some of these stocks start begin to roll over again, but we'll have to see how things look then. Right now, though, the Fed has kind of set the stage, and today's market action, I believe, has too, where it's going to be metals and mining that are likely to lead the way because they've gotten so oversold, and and we got dovish. Wow, really dovish, liftoff, transitory inflation, goodness gracious, pledging not to raise rates for 2 years. So I don't know what more someone who wants dovish words and phrases coming from the Fed, what more such a person could want. In fact, I was watching CNBC as the statement was coming out, and they were so excited on there that they were calling it a success. And someone said the Fed had to thread a needle, and it was successful. They're so excited about what is happening. Of course, the long-term implications, no one wants to talk about that. No one wants to talk about growing debt or what happens when inflation does run red hot and doesn't come back down. We're not going to think about such things because all anyone wants to think about, all anyone wants to hear about that watch these financial networks and channels, and even people on YouTube that got Robinhood accounts or traders, all they want to hear about is how the Fed is going to do things to make their stocks go up. They don't want to hear about bad implications of what that can mean with inflation, with the rising cost of living. What's going to happen if food prices go up or it goes up to get a gallon of tank of gas? All people want are rising stock prices, and the Fed has definitely delivered as much as possible on that. So that's kind of where things are standing right now. And I don't really have much more to add today. We went through the stocks. Oh, one little story I want to point out because it is kind of funny, and why I'm such a skeptic on things such as the ARK ETF, by the way. I just got to point I sent out these morning emails. You're not on the morning email list, you got to get on it. It's free. There's a link in the description. And if you're not a subscriber either of my YouTube videos, hit the subscribe button and click the bell next to it, and YouTube will notify you when the next video goes up. But check this out. Plug stock a buy now. Plug Power tumbles on accounting errors. Okay. Plug Power real restate financial statements for the last 4 years. Now, what kind of company out there has to one day announce, we got our financial statements all wrong and we're going to restate them? And that's what they just did. And they're one of the top stocks in the NASDAQ. And here's what it did. It gapped down, and it's one of the top stocks in the ARK ETF. So that's another reason why I really think it's a junk ETF, one to avoid at all costs. I'm not long that ETF. I'm not short that ETF. But my goal is to show people that they can beat the market without investing in fad tech stocks like Plug or Tesla, that they can do it by diversifying in sectors more tied into the real world, what's going on in the economy. Shipping companies are real. Without shipping companies, you wouldn't have Teslas going across the ocean. You wouldn't have Walmart being able to make money. Without energy stocks, you wouldn't have oil at the gas tank. And without mining stocks and silver, you wouldn't have gold. And without silver, you wouldn't have the iPhone. You wouldn't have computers because silver's used in it. I like to invest in real things that earnings grow when the economy grows, not just fads. And we saw a lot of fad stocks like Zoom, that everyone had to buy Zoom because everyone became a shut-in 2020. offices shut down. Well, people are sick of being in their office. They're sick of being in their home. People want to have meetings now with real people in the real world, and they want to get off Zoom, you know. So that's what's going to happen. Zoom's peaked out probably as far as a social uh, thing, development, whatever you want to call it. Even a company like Netflix, people want to turn off the TV. Summer is coming. They want to go outside and do stuff. Now's the time. People want their lives back. They want to get off the internet. They want to get away from all this. And that's what I'm going to do in just a moment. I'm going to end this video so I can go outside myself and take a walk. And I recommend that you get some exercise and do something like that too. So it was good talking with you today, and we'll talk again later on.